Blockchain is supposed to be about transparency, and it just never seems to actually be about that. There's a lot of bad actors. They're just trying to suck people in, collect as many funds as they can, and then run out the back door. We thought to ourselves, why can't you have the benefits of ease of use with the security of knowing that you maintain control of your assets at all times? What we're building is an all-in-one platform. Right now, if you want to do research, if you want to do analytics, if you want to trade, you might notice that you end up having 10, 15, 20 tabs open at the same time. And we thought, really, this should all be in one place. And there are two kind of pieces to what we're building, right? There's the research side of things, but there's also the native decentralized exchange. We want to make this accessible to the average user. This is a blend of Web 2 and Web 3. We love the innovation that's happening in Web 3, but the world isn't ready to just make the jump yet. And so we want people to be able to set up an account very simply. They can sign in using Google, they can sign in using their email. We're making this more accessible to the masses. There's no barrier of entry anymore.
When can people start using your product?
So we actually just released our public beta. It's been very well received thus far. The components of this are being released kind of piecemeal. We really want to focus on getting each individual item right.
How bullish are you on this space? You want to be in this for a long time. What do you think's coming?
I think where all this is going, it feels like an inevitability. This technology is just better. We're here to stay. We want to build the future, and the future is transparent, public, unmalleable ledgers that allow for transfers of value without any form of manipulation.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
This is London Real. I am Brian Rose. My guest today is Ben Kurland, the former Hollywood actor turned crypto entrepreneur and blockchain expert. For nearly a decade, you have advised over a dozen blockchain projects, working with major crypto platforms, high-profile celebrities, and athletes. Before this, you were an actor and producer, most notably appearing in the 5-time Academy Award-winning film, The Artist. Earlier this year, you became the CEO of DYOR, an all-in-one trading and analytics platform that is pioneering a new era for decentralized finance. DYOR plans to be a next-generation command center for Web3 that is democratizing finance, championing fairness, and offering everyone an equal chance to succeed. Your mission is to cultivate a community where everyone has the power to influence and benefit from the upcoming DeFi revolution. Ben, welcome to London Real.
Brian, thanks for having me.
Great to have you here. I want to start by saying that DYOR is one of our portfolio companies here at London Real Ventures, the world's first media-powered investment firm, where our mission is to transform the world by investing in cutting-edge Web3 and AI companies while giving our partners marketing exposure across the London Real media platforms and academies. We heighten awareness, create customers, and build communities by leveraging our global audience and extensive network. We are super excited to be working with you guys, so let's just jump into it. What is DYOR?
DYOR is, it's a common acronym in the space. It stands for Do Your Own Research. Surprisingly, this was not taken yet, and we thought this is an incredible opportunity to really leverage the popularity of this. And what we're building is an all-in-one platform. So right now, if you want to do research, if you want to do analytics, if you want to trade, if you want to track somebody's socials, if you want to kind of do any of these types of activities, you might notice that you end up having 10, 15, 20 tabs open at the same time. And we thought, really, this should all be in one place. And so we're consolidating all of those things. We're bringing them all into one single pane of glass. And we're making something that is very customizable so that there's a personalization to this that doesn't exist right now. Really, everything else is you go there, you kind of have to sift through a lot of different information. We really want it to be an access terminal that everybody is able to really personalize and make sure that they're getting all the information that they want and none of the information that they don't want that's just taking up space.
Yeah, so let's talk about this because this is something we all struggle with in this industry. You know, I teach a crypto and DeFi academy where for 4 weeks I take people with like no experience and I walk them all the way through. They set up centralized exchanges, which they hate doing. They do their first DeFi trade. They do hot wallets and cold wallets. And they're always asking me like, Brian, like, where do I get my information from? And how do I do this? And how do I do that? And there's no all-in-one solution. And each one of those things I mentioned all have major flaws, right? From the centralized exchanges over to the DeFi platforms like Uniswap, over to the coin market caps. And I'm assuming you guys looked at all of that and said, we need to make this better. And you want to bring it all together. And that's what you're trying to do.
Yeah, we've been in the space quite a long time. I've been in the space personally since 2016. And we just kind of felt like these tools were broken, right? They're designed for developers, designed by developers for developers, not for the average user. They're confusing. I remember when I first got into this, having to cross both my fingers and my toes every time I pushed a transaction through the network, let alone a large transaction, because you really felt like there's some danger in this. There's some uncertainty in it, and we wanted to kind of demystify the whole process for the average person. At the same time, you brought up this idea that there's all these centralized exchanges, and we've seen over the course of the last 3-4 years what happens when you entrust your assets to a unregulated third party. It does not go well. Part of the reason that blockchain exists is for this very reason, which is this kind of universal distrust of central entities that don't have your best interests at heart. And yet we were so eager to have that ease of use that we just willingly handed over our assets to these companies. And so we're trying to bridge this gap here because on the one hand, you have these untrustworthy third parties, and on the other hand, you have these very confusing, complicated, decentralized applications. And we thought to ourselves, why can't it be both? Why can't you have the benefits of ease of use with the security of knowing that you maintain control over your assets at all time?
I'm so glad you're building this because I literally deal with these struggles every day. Again, I teach these people. I've had an 85-year-old grandma and a 15-year-old high school student and everybody in between from countries all over the world. And they struggle with everything you're talking about. They struggle to plug that hot wallet in with the Chrome browser plug-in. And when they go send a transaction and then nothing happens for 18 minutes, they freak out. Meanwhile, when they go to a centralized exchange, they get angry because they have to upload a utility bill and an ID, and they thought this was blockchain. And then their bank blocks them from using their own fiat money to buy crypto. and they're frustrated. And then they see things like FTX happen or Mt. Gox that happened 10 years earlier, and it's going to happen again in the future. These aren't crypto companies. These are old school stockbrokers that are doing the same thing they've been doing for 100 years. I used to work in banking. I know the game. And now they're just doing it with blockchain assets. But there's nothing blockchain about Coinbase. They're market makers and middlemen, for a new asset class. And nobody necessarily understands that. And so you guys see that. Can you start by talking about what is wrong with centralized exchanges like a Binance or a Coinbase or a Crypto.com, or at least what are their limitations? Because not everyone knows that. I mean, they saw, obviously, FTX go wrong, but what are some of the things that aren't in the interest of the customer when it comes to those platforms?
I think inherently there's just a misalignment in general. You have these companies who are heavily incentivized to try to have as many assets on hand as possible, and then they're leveraging those assets almost as though they were a bank. And we saw with Celsius, for example, and that whole debacle. And I unfortunately was one of the unwitting victims of that as well, because it's inspiring this idea of debanking, and it's inspiring this idea of, and it's a great narrative, right, on its surface, which is we're just doing what traditional banks do, which is we're rehypothecating, which is a fancy way of saying we're loaning out the money over and over and over again. And as a result of that, the yield that we're able to generate off that money is meaningful. And the banks are giving you these teeny tiny little interest rates. It's kind of changed now because the game has changed a little bit. But once those federal rates come down again, they'll be back to next to nothing. And so it was a very enticing idea. The trouble is that these companies knew that their models were completely unsustainable. And when it comes to the centralized exchanges, their business models are somewhat unsustainable as well, in terms of the fact that they're constantly trying to churn out new customers. And because the narratives that have been created, because of all these hacks, because of all of these bankruptcies and defaults, there's a real fear of holding assets on these exchanges now, which was really, in part, a lot of their main business model is, we want to be able to have access to these assets so that we can leverage them and we can do all these things, even though they don't really have permission to do those things. And under normal circumstances, if this was regulated in a more traditional fashion, they wouldn't have the right to. And so there is this big misalignment in terms of, what they're after and what their intentions are. And there's not much interest in the average customer other than, trying to convince them that, hey, we're the safe one.
I try to explain this to my students, and it's really hard because unless you've worked as a market maker in like a Wall Street firm, there's all these tricks of the trade that Wall Street has been they've been making even better and better over the last 100 years. And once you're in there, you realize you can front run your customers. You can, when your customer is asked to move from one asset to the other, they don't know the real price. So you can gouge them for chunks of P&L. And these are things that the banks on Wall Street have been doing for a long time. Your average person doesn't know that. And so they're like, well, Brian, why would I use Uniswap when Coinbase will switch my Ethereum, to Chainlink the same way? And I'm like, yeah, they will. But if you're not paying attention, they might take a big bite out of your neck while they do it, and you'll never be any the wiser.
Here's what's interesting about that too, is that not a lot of people realize that zero fees isn't zero fees.
Yes.
If you think about platforms like Robinhood, they make their money off the spread, meaning whatever they're price quoting you is different than the spot price of something, and that difference is their profit. And it's wrong, it's also manipulative and it's duplicitous. And, blockchain is supposed to be about transparency, and it just never seems to actually be about that. And what's interesting, you mentioned front running, and what tends to happen is that, you think you're protecting yourself by going on a centralized exchange. The front running is happening in lightning quick speed, and it's happening internally as well. They have all this data and information, and they're the ones controlling and facilitating those trades, those exchanges. On the flip side of that, you've got actual issues, especially on things like the Ethereum network, where you have MEV bots. Front running and sandwiching are prolific issues, where there are these bots that have been set up to beat you to the punch. And what's actually happening on a blockchain is that when you go to process a transaction, that transaction is sent publicly into a queue, and then it is presented as something to bid on for a validator. And what happens is that somebody bribes those validators using these sophisticated bots and allows them to buy whatever you're buying before you to get in at a better price, and then sell it after you're done. That's what a sandwich attack is. And so we wanted to kind of eliminate all those things. We've got a number of different partners that are helping us in that way to create custom private networks. And what those private networks do is that instead of broadcasting those transactions publicly, they sit privately, and then they're processed instantaneously. They're bundled up together, they're ordered correctly, and therefore you're getting the best possible price without being attacked or being victimized by these bots.
That's amazing. And this is so important for people to understand. And if you don't know what front running means, it just means if you're going to go buy some crypto, someone else can buy right in front of you. And then your trade pushes the price up, and then they can sell right after you, and they can take little bits of your trade. And over time, that really adds up. Now, you mentioned Robinhood. Robinhood, in addition to charging something slightly off spot, also sells all of your data to the high frequency traders.
Yep.
And a lot of people don't know that, but our Robinhood, steal from the rich and give to the poor, is giving all your information to the rich. And so, but people aren't aware of all these nuances. And I always give an example where I ask people, have they ever exchanged money at an airport? And they're like, yeah, you go to these tiny little kiosks, right? And you change $100 before you come into London, and how many pounds they give you? And they're like, well, you get 60 pounds. And you're like, well, it seems about right. But there's no fees. And you get your 60 pounds, right? And let's say you don't use it, and you come back to the same airport and you bring your 60 pounds and they give you back $90. And you're like, wait a second, where's my $100? And they're like, well, this is the opposite exchange rate, but there's no fees. So you just lost $10 in that transaction, 10% of your asset value, but there's no fees. And so it's exactly what you're saying. There's all these little nuances that the average person doesn't understand. And it's important that they do understand it, because this is happening every day with all these actors that don't have, aligned interests with their customers. That's the centralized exchange side. Well, what else do we need to know or make clear about centralized exchanges besides the fact that they're making money off of your volume, off of adjusting prices? Anything else people should know besides the fact that holding your assets there in custody isn't the safest thing to do either?
Yeah, I think that's really the key, is that, I've been in the space for so long. I've seen so many of these exchanges come and go. They're not regulated. They're in countries that, you think you're dealing with a country that may be familiar to you, somewhere in Europe, somewhere in North America. You're not. And these things are popping up left and right all over the place. And some of them are just overnight. And I can't, if you ever have a subscription to Netflix or Amazon, you know all too well that there's just so many documentaries that have, listed this record of, it's not just the big exchanges. It's not just the FTXs, which are so prominently featured. It's, there's obscure exchanges out of Canada, and there's a documentary about that. And there's ones in all over Eastern Europe and through Asia that there's a lot of bad actors, and they're effectively these spider webs, right? They're just trying to suck people in, collect as many funds as they can, and then run out the back door. And there's really nothing stopping this from happening at this point until there's actual regulation, and until there's some oversight that allows people to have trust in these companies. But even then, the whole point of this is really to get people used to the idea of self-ownership. I mean, that is a really big part of this evolution with blockchain, is this idea that your data is your data, your assets are your assets. And the idea that you'd want to have someone, saying, hey, trust me, I'm gonna take good care of you, I'm gonna do all these things for you, I think is while comforting, and everybody likes to feel warm and fuzzy, and these things are being handled on my behalf or for me. There's a real price to pay for that. There's risk involved in it. There's high fees involved in it, and at the end of the day, what you believe to be yours is no longer yours.
Yeah, it's almost the opposite of what we're trying to do with blockchain. So, all right, that's the centralized exchange side. The flip side of that, and there's only two choices, it seems sometimes, is fully decentralized. And so, again, I have a lot of experience trying to teach my students this, and now you've got a completely different experience with no touch points, no hand-holding, no security. What's wrong with the Uniswap side of it and all of the plugging my hot wallet into something like that? Because that's what a lot of people end up using in decentralized finance.
Yeah, there's a couple of inherent problems with a lot of these companies. So, for example, we have a competitor. I won't name names, but they had a third-party decentralized exchange as part of their platform, and that decentralized exchange very publicly got hacked for roughly, I want to say, $50 million. The hacker turned out to be a bit of a trickster and effectively said, I have some demands. First of all, I'm now the new CEO of the decentralized exchange. It was pretty wild of an experience, but it just goes to show you that it does matter the level of security of a lot of these things. On the flip side of that, you have something like Uniswap that has been around for a long time now. It's effectively a legacy exchange. However, it's run by effectively a decentralized group of individuals that will vote on changes. And if you've ever run a business or know anything about business, that is a terrible way to run a business, because what ends up happening is that you're very slow to make changes. It's very hard to come to a consensus about a path forward or what should be implemented. And what you're left with is kind of this really janky process in which you get so frustrated, by even the littlest things not being changed. I remember using Uniswap for many years and thinking, why don't they have a comma separator? There's tokens that have, a max supply of 10 trillion, and it's really hard to decipher as a user, especially if you're trying to do something quickly. Am I buying 10 million of this, 100 million of this? And as a result of it just being this string of numbers, it's really hard to ascertain. And it's the simplest thing to just add those comma separators. It's like one line of code, really. And yet it wasn't there. And it wasn't there because it wasn't voted to be there. And that's a real problem. It's a real problem. I've often said that while blockchain should be decentralized, the products and services that are facilitating and supporting blockchain should not be decentralized. They should be run by a competent group of individuals that have good support. They should be run like proper companies. Yeah. And this notion that we should have everything in the world be decentralized, I think is kind of missing the plot a bit.
Yeah, so when I first went heavy into this space 3 years ago, everyone was talking about DAOs, and everyone was talking about this is the future of governance. And a couple times I said, well, wait a second. Would the iPhone have been developed without a Steve Jobs, who famously said, my customers don't tell me what they want, I tell them. And there's a place for leadership, and there's a place for accountability to a small group of intelligent people to make innovation. I love the concept of, Web3 and ownership, but I was always a little bit skeptical whether it could be used to take companies and keep them leaders in their field. So that was an issue. Uniswap has gotten criticism over the last maybe 12 or 18 months with the fact that the fees it was charging was not going back in the token. And so a lot of people were saying, what's going on here? TVL's going up, but the token isn't going up because literally they're taking all the cash from the fees and it's going to the company. It's not going back out to the token. And it was probably a pretty reasonable critique of that system. What did you make of that? But it also shows something that looks purely decentralized is not really that.
Yeah, so this is actually a very interesting point and something that we've put a real focus on. And there are two kind of pieces to what we're building, right? There's the research side of things, but there's also the native decentralized exchange. And the decentralized exchange, we wanted to make sure that this was truly the fastest, the best decentralized exchange that currently exists. So we use the best technology. And the development of this actually precedes the development of the research platform by about 18 months. We're doing it in conjunction with our sister project, Diamond Swap. And the concept behind it, and the reason that they use the term diamond is it refers to the diamond standard, which is a protocol that allows for upgrades in place. And what this effectively means is that if there were, God forbid, a hack, a bug, any kind of exploit, that instead of having to redesign everything or shut down the system entirely, you could simply basically update it like pushing a patch, if you think about a bug on your iPhone, in a very similar way. And that's not to say that you can update or fix anything. So all of the core elements are still retained. All of the integrity is still retained. However, if there was some kind of minor exploit that somebody could potentially take advantage of, you could resolve that very, very quickly. The point that you were making about the fees and how they're used is something that really bothered us personally. It's such a misalignment. These are meant to be tools that help foster innovation and growth, support these projects. If you're going to be listed somewhere and hold liquidity somewhere, that should be a place that is a benefit to you as an organization and that community as well. And what ended up happening, from my understanding, is that the fees are collected in both, the trading pairs are, if you have a liquidity pool, it could be, XYZ token coupled with the larger layer one blockchain. So something like an Ethereum. And we'll use that as an example. So you got your XYZ token and your Ethereum. And every time a trade is facilitated, 50% of the fees are in Ethereum and the other 50% are in XYZ token. And what happens to that XYZ token is something that nobody really thought about before. We came to understand that right about every quarter, a quarterly decision was made. Let's dump those tokens. Let's sell them. They're of no use to us. They're of no value to us. And of course, what happens when you have accumulated over the course of 3 months all of those fees in that native token is that the price is going to be devastated. It's going to have a huge impact, a huge negative impact on price. One of the things that we thought about early on was we don't want that to be the case. Instead, we want to offer the same fair competitive pricing, which means that we will receive half of those tokens in native, half of those tokens as native tokens. We want to make an offer. We want to reach out to those projects and say, instead of us selling those tokens, let's give them back to you, but let's do something interesting with them. Let's have an airdrop campaign to support your community. Let's create a reward system that benefits other people supporting your platform. And in return, show us some love, whether that's getting your community to help support us, help create more awareness for us. But there has to be some kind of communal participation here so that these interests are aligned. And it's just not something that these legacy exchanges are interested in.
Now, has Uniswap fixed that, or are they still nowhere near where they need to be when it comes to aligning their revenues with their token holders and their community and their DAO?
Not to my knowledge.
Yeah.
I don't know that it's been fixed, and frankly, I don't expect to see it anytime soon. In fact, Uniswap just introduced new additional fees on top of the regular fees. So when you're using their platform directly, I want to say it's an additional 0.25% now on top of their base transaction fee. So it's ironically, it's actually cheaper if you create a direct access to their smart contracts. It's actually cheaper to trade than it is to trade on their website or using their app.
Well, they're now kind of a monopoly, right? I mean,
Yep.
They now get all the market share, and so now they can kind of command the type of fees that they want, And so, all right, so we've got these tale of two cities, these extreme worlds. One where you've got these kind of broker dealers that aren't aligned at all with our customers, and the other one you have this decentralized finance part where, again, incentives aren't aligned. What do you guys bring to the table? Also, there's no customer service. There's not much of a customer experience on those DeFi platforms. And I always point this out to my students. I'm like, what was it like when you were there? And they're like, well, it feels pretty bare bones. It's like the IKEA of websites. There's no hotline, there's no chat. It's like either you get it or you don't, and then if not, hit the road. You guys are big into personalization, and I think customer service is a big part of what you want to do as well.
Yeah, we want to make this accessible to the average user. It's not just about these super users that are highly competent and highly technical. This is not going to succeed in terms of mass adoption unless these products and these services feel like the typical things that people use every day on their phone, on their computer, their banking apps, their grocery shopping apps, their Amazon apps. They need to feel like you can get things done at the touch of a tap, a swipe, what have you, a click of a button. And right now they don't, and they're scary. And what makes it scarier is the idea that if something goes wrong, if you've made a mistake, if you've done something and you're not sure what you've done, who do you call? Ghostbusters, I guess, is who you call right now. You'd have to, or a seance or something. There's no actual customer service, and that part was mind-boggling to us as well. Is this idea of how are you running these, businesses that are generating tens of millions, if not hundreds of millions of dollars of revenue, and yet you don't have a support team, you don't have anybody that's going to support your customers. I mean, even the centralized exchanges were woefully underprepared for the level of questions and requests the inquiries they were making. Coinbase was notorious for having a lot of these issues earlier on. And people thought, this is a publicly traded company. The idea that I can't get somebody on the phone when they're bringing in all of this revenue, it again is just another large misalignment. And really what it boils down to is this notion that these companies have long felt that because they were first to market, that no one's coming along to take our lunch. Well, we're coming.
Yeah. It's that classic innovator's dilemma. I mean, they don't need to innovate, so they won't. They have the market share. And it takes someone like you to come in and say, wait a second, we've been doing the same kind of thing now for 3-4 years. Uniswap's been pretty liquid now for 4 years. You thinking we got to rethink this and really think about the customer. And I deal with customers that are confused every single day. They're confused on their centralized exchanges. They don't understand why they can and can't do things. And then they're super confused with their decentralized finance protocols. Like they really don't get it. And the only reason I'm able to have any success with my students is because I'm literally there teaching them live every week, and they've paid a tuition to do it. Your average person, I don't know how they ever learn this stuff. I don't think they do. And which means they walk away from this amazing world of decentralized finance, which I really think is the future. Talk to me about something like a stop loss order. Okay, this is something I try to teach my students in the 4th week. And it's this concept that, when you put a trade on, you limit your losses by leaving an order with someone to basically reverse your transaction. So you don't lose 100% of your principal, maybe you lose 2% or 5% of your principal. The problem I have is that all my students complained and said, but Brian, You told me not to leave my assets on a centralized exchange. And you know what I told him? I said, somebody's working on a DEX that has stop losses, but it's not built yet. I guess I was talking about you guys, right? Because you're planning to build something like that.
Yeah, it's one of the main reasons that people want to use a centralized exchange is it has all of those tools and features that traditional traders are used to, stop losses and things of this nature. Because, the old way of working through a decentralized exchange was you'd literally just sit at your terminal and just stare for hours and hours and hours, because if you got up, and these are very volatile assets, and you disappeared from your computer to go get a sandwich or a cup of coffee, the price might, have gone down or soared up, and you might have missed that window of opportunity that you were looking for. And I mean, this is no way to go about your life. And so it is a bit of a complicated thing to do because obviously without that centralization, everything needs to be automated and it all has to function through these relatively sophisticated smart contracts. The hardest thing about these smart contracts that are put in place for something like a stop loss is that there's a limited amount of memory when it comes to, so it's not just coins that are being transferred, it's actually data that's being transferred, across these blockchains. And the size matters in terms of the fact that you can't send too much data over the network. That kind of bogs it down. It gets heavy. There's specific block sizes for these things, so there are limitations. And so the solution to that has been to create these really cumbersome, complicated smart contracts. And they work. However, the more complicated a smart contract is, the more expensive the fee is to facilitate that transaction because of all the things that have to be checked, all these little boxes that have to be checked, the sort of if this then that manifesto. And as a result, the pre-existing complicated things like a stop loss have just been way too expensive for the average person to really use this thing. The amount of money that you would have to put into a system like that to justify the spend on the fee, on the gas fee, it just makes it out of hand for the average user. With this diamond standard, it allows us to have more memory, more information utilized through these transactions, simultaneously reducing the gas fees. And it's just a step change in terms of what we're capable of doing. And because of how these other smart contracts are constructed with legacy decentralized exchanges, they can't build something new. They would literally have to shut down those exchanges, those swaps. They have to remove the liquidity in order to do that. It would be a very complicated, difficult task, and it's not something that they're likely to do. And so our advantage is that we're newer, where we have the ability to make these upgrades. We have newer, better technology to be able to do that. And therefore, we are going to be able to provide things that are going to make that decentralized exchange feel like a centralized exchange without having to risk, handing over your crypto to a third party.
Wow. So I'll be able to do stop losses on a DEX, is what you're saying?
You will.
Man, that's music to my ears, man. All my students are going to be super happy about that. And no one else is doing this now because, like you said, they'd have to completely re-engineer their legacy platforms. They're already making money. They already have market share. So why bother? And you guys are looking at it from a completely different way. You have a very serious team of developers behind you, don't you? And I was explaining DYOR to somebody here on my team today, and I said, the reason we like these guys is because they bring an entire development staff that has experience building projects in Web 2. And when you guys speak about something, it has a different kind of a gravitas than a lot of DeFi projects that come my way that are 5 dudes and a dog or 6 girls and a cat, that are just going to whip this thing up.
Yeah.
But you guys don't do that. And again, you mentioned Diamond Swap. I think we're an investor in that as well. And the reason we said yes to that is because I think it's the whole infrastructure team behind that as well. So I think you guys do things in a different way than other people do, and you develop in a more robust way than what I typically see in Web3 projects. Is that right, the way I feel it or see it?
Yeah, I think it's a testament to the unique team behind all of this. We've got, myself, I have a very unique and interesting background, but my business partners as well. One of them is an attorney by trade and a serial entrepreneur who had come to crypto very late and really is taking a unique approach to this. He's not crypto native. He's native to the world of entrepreneur and marketing and sales. And we bring that type of traditional experience into a realm that typically is devoid of that, simply because the people that know about crypto, the people that are developing these projects, tend to be people who come from just a very different walk of life and don't have those experiences. And unfortunately, and this is kind of the conundrum in the space, is you have these really talented marketers that end up partnering up with not as strong developers, and vice versa. You have these really strong developers that are building these amazing products, but nobody's ever heard of them because they don't have a really strong marketing plan or team behind that. And we were very fortunate. We lucked out. I met Hank Wyatt, who is our CTO on the DYOR side. He's the CEO of Diamond Swap. And he came, built in with a development group. A group of guys that, he founded that company, that development company, when he was, I want to say he was 10 years old. We've nicknamed him Boy Genius internally on the team. I know you're going to be speaking to him as well. But he's an incredibly well-spoken, highly intelligent individual.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.